the first thing you need to know. Just let's look at the settings. I set this to low. I make this 10, right? So it means 10 candles, and it's going to make it an 8% drop. So that means it needs to drop at least 8% in 10 candles. Then it needs to bounce at least 6% in 9 candles. So that means it needs to go up at least 6%. So it needs to drop 8%, it needs to bounce 6%. It's going to put a base down. And then this is really hard to explain, but I just have it at 10. It just has to do with creating new bases, but you don't need to worry about that. And then here's the layering is 5, 10, 15. And the reason I'm doing it that way is because, well, let me explain this. So right here, I'm doubling the size, right? So it doubles up right here. And then 1, 2, 3, 4, then you get 4 times the size. But the reason that I have it like this, because I'm not going to start buying until right here. So literally it's going to be like this. I'm going to buy 1 layer, then double up and get 2 layers, and then double up, boom, 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 and get 4 layers. So that's how it's going to work. Now, this take profit percentage, this is where it's really important. It's set at 2.75. So what that means is the way that I have this set up, since it's 1 layer, and then 1 layer. So I'll show you on the chart, but just keep in mind that this number is the reason why these layers are set up like this, even though I'm going to start buying right here. And, I'm going to keep this at 2020 just in case, sometimes the algorithm will get stuck. And I just keep it at 2020. And then I make these yellow because it's just kind of my brain understands that after watching so many, QFL videos. And then I make this a circle, and I just turn that all the way off. So it was at 100, and I brought it all the way down to 0. So that's like very obvious sell red dot. And then I make this a triangle, but you may want to make this 3rd layer a triangle instead, and you could even just turn these off so that you're not even seeing them. I prefer just to see the triangle on the 1st layer being hit because that's me mentally preparing, and once I see a triangle, I'm like, okay, I'm going to start layering in. And I think that's about it. But so here's the deal. I'm going to do this like before. Oh, and there was one more thing. It was the set to show layer lines. I say always. It's just mentally easier for me to just look at the number where I need to be placing my buys. But this is all you need to know is that, like, let's just take this indicator off. Okay, this is what I'm doing. I'm very well versed in what I'm looking for before I even use the indicator. So this indicator is basically like, okay, I'm looking at this chart right now, and let's just pick 2 months because that's like the QFL, right? So October, then we would want like August 22nd. So like this, and I'm on a 4-hour chart. I recommend, I'll explain why you would go down to a 1 hour or 2 hour, but let's just start here with a 4-hour. So, okay, look, I'm looking for the letter V. So check this out. V, okay, that's not a V. V, yeah, okay, you know what? That's more of like a check mark. That's fine. Check marks are fine, but I really want to see like something just explode, like it's like a trampoline bouncing. And this right here, and so this is what I'm doing. This is the key. This is it. These little date and price range things, and you can find them right inside of here. I just add them to my favorites. And then this is what I do, because you're going to get them and they're going to have this like weird blue, like they're going to look like this when you first get them. See how mine don't have the blue background and then the weird blue line? The way that I did that was I came inside of here, I turned this line all the way down to 0, and I just unchecked label background. It's just cleaner. Like, this is what I want to do. I want to look at this chart really quickly. Let me take off the little brush. So what I'm doing, in fact, you know what? I'm going to take these off too, because I want to show you something. Okay, so I'm just going to put one of these on here, and I'm going to say, my God, that's 42%. Okay, I'm looking for like maybe like 15, 20% bounce. If all the other bounces on this chart are humongous, like look, let me add another one. Okay, that's like a 25% bounce. So that's what I'm looking for. That's what I want. I want that 25% bounce just out of the gate. Like, look at that, 25%. And again, like, it doesn't have to dip down like a V, but look, 36, 35. Let's bring it up here. Look, there's that 25% bounce. This is Cardano or whatever. This is what I'm looking for. I'm looking for, I mean, like, there's a bounce right here. What is it? 22. So this is really what helped me, like, actually be able to trade this strategy. Is like these, and there's nothing against drawing a base on a 12% bounce. It's just that if we're here to take safe trades, well, I want to take the safest trades because I just don't have the mental capacity to dig myself out just right now in my life. So I want to take only the absolute safest trades out of the safest trades. And starting to drop. Cool. One second. This may actually end up being like a perfect example. So I've got some trades. I'm going to publish this video too. This was a premature buy, but this has nothing to do with the strategy. I'm very happy with the way that I have this set up. But let's go back to Cardano ADA. Here's the important thing is I know, look, if I draw a base right here, right? I know that there's a good chance that it's not going to respect that base anytime soon. I want to take the safest trades. And so this is where this indicator is going to come in. It's going to show us kind of what the deal is. And this is the base that I'm going to be like mentally, now that you know, okay, I'm looking for a base, right? Well, yeah, I could accept a base right here, but I could also accept a base right here. And so my goal at this point with this particular indicator is to do one thing. Let me get these things that I've drawn off of here. And so now you can see, let's scroll this out. So look, it put a base right here. Is that a base? I don't know. But do I want to play that base? If I'm going to start buying down here, then, I mean, it's already dropped. Let's see. So these are 5% increments. So like 5, 10, 15. So it's already going to drop from way up here. And this is probably like 5 right here. So by the time that it gets down here, look, 5, 10, 15, it's in line with this other 5%. And chances are it's just going to retract up. So it's not that I'm against this. It's just that I want you to know how I'm going to use this indicator. And look, like I have my alert line. I'm ready for it to cross this. So even I'm getting ready to buy it 5, 10, 15. I'm going to start buying it way down here. You know what I mean? And if it doesn't get down there, then I don't want to buy it. But I'll explain why I would buy that down there. I just want this indicator to draw a base right there at this point. Okay? Or maybe, excuse me, it's right here. So I'm switching time frames. There's that base that I'm talking about. Now, it doesn't have to be perfect. Like, this is what's really important about this. It's just that I have a line right there that says that could be considered the base. And look, like if I move this up to here, all right, that's 16%. I'll call that a base. I'll call it a base. Now, it could move down here, and we could call this the base, but just for the sake of the indicator, look, let me put it to 1. If I can get that indicator to draw, it doesn't even draw it on the 1 hour. So this is exactly how I'm using it. I'm like, where is it drawing the base on the 4 hour? If I can get this to draw a base right here, then this is how I'm going to use the indicator. Let's try the 12 hour. It's about to consider this as the base. Let's just say that. So let's try daily. Okay, to me, that's the base right there. And so I have the daily, right? Do you see how I'm doing this? Yes, I could go to the 1 hour and trade this on the 1 hour, the 2 hour, 3 hour, 4 hour. All I care about, see how it put the base right on this particular line right here? This is how I'm using the indicator. I'm not just taking every single base that's drawn on like one time frame and saying this is the base. I'm qualifying the base with my eyes, and I'm saying how much does it usually bounce up, and then I measure it with this tool, and I drag it up, and then I get that measurement, and then I switch the time frames until the time frame locks in on that level. And then what that does is it enables me to either, like, depending on if you have like a TradingView account There's also auto view. And it's just like, it's genuinely like, for a friend of mine, auto view is going to be like all of this stuff. It's just going to be really complicated to set up. Um, I design websites, right? I'm barely getting by, and like I know a little bit of coding. Like I know enough coding to get by in the web design realm, but this is definitely up there with web design. And most of my friends get me to build the websites for them. And so while I would recommend this is a great setup, it's going to be a little bit challenging to learn code, syntax. You're going to have to like go to forums and do all of that stuff. I could make a video to like break down what I'm doing. It's just that like it's going to open a can of worms for me to have to explain this even more, even further. But this is like why I'm excited about this indicator. This is why I would show this to somebody, is because I'm able to, like, this is what's great about this. I'm able to lock in, man, I'm semi-excited. See, I'm now comfortable with price dropping because of this indicator. And it's because I know from prior, like I can just look at the past examples. So look, here was the base right here. And then I take this little tool. I'm saying, how much did this come up? 16%. I'll qualify that as a base, sure. And then it comes down, look, 5%, 10%. Now this is where I must explain why this take profit 2.75% is so important. It's because I'm not going to take this trade. This is only 10%. Like I want it to at least come down here. And then this is the other important thing is I don't want it to bounce and then come back and then come down. You see how that works? I want it to put a signal on this indicator without coming back and hitting my take profit line at 2.75. So what it is it's like qualifying that it's a real panic, and the most qualified panic is it's gonna drop really fast, and it's gonna get down to about 15%. It doesn't have to be exactly 15%. I could use this base right here, not this one, but I could use where was it? Was it on the 1 hour? Or maybe the 2 hour? I could use this base. Like this is fine. It's 5, 10, 15. So I'd be buying it about right here instead of, so let me put like a horizontal line. I would be buying using this base right here. But if I go to the daily, then I would start buying at this base right here. And it really doesn't matter. All exchanges are different. There's going to be somebody that's going to be blocking a buy somewhere else that you're never going to get that buy limit order filled. So does it matter if it's this base, or this base? Like you can tell I'm really excited about this because finally I have something where like I genuinely feel confident that I can go to sleep at night. And the reason that I can go to sleep at night is because I'm setting these alerts up with auto view to communicate with my exchange. And so once it crosses, this first line, it's going to set up, it's going to take all these layers right here. Like, look, I could set it up where, okay, it comes down to this first line. And once it triggers that first line, then it's going to set up my buy layer right here, buy layer right here, and buy layer right here. And I'm going to, do like, let's say like 20 bucks, 30 bucks. And then right here, I could do, 40 bucks, 50 bucks. And then right here, I could go on like 100 bucks, 200 bucks. And then so once it goes past this line right here, if it's going to go past that, I want to manage that trade on my own. And so, I could set up an alert below this. I could put this line down below here and say, because I'm going to get an alert once it crosses this line. But if it keeps going down further, maybe I might get a wick down here and I'll miss, having my money down there. But I want to manage that visually on my own. Because if it just keeps, let's just say some crazy drop happens. I mean, it just goes like 50%, just like that. I don't want to just be buying 5, 5, 5, 5, 5. Like, oh, I'm going to buy another 5%, 5%, 5%. If it just keeps going down, like, I want to see how fast, like, the velocity, the speed it's going. And so that's why I don't have additional layers down past that. But most of these are going to be, like, pretty small. Like, I'm anticipating, like, a 30% drop. Like, I'm preparing for that. Like, I have to have capital set aside for that opportunity to happen. I can't just, like, spend this huge amount of money up front on these, potentially damaging trades that they can keep going down and they won't stop. And, you've bought, and you're not even close to break even. It's just, you got to pick the right situation to be in. And honestly, I just don't trust the market right now to not do that. Just for right now. Like, I just genuinely feel like this market could get very volatile depending on like what news comes out. And so I don't want to leave anything on the books just yet, but it's just a long-winded way of saying that it really doesn't matter where your layers are at, just so long as you're able to get in and out of these trades safely. And so once it crosses down, this is that 2.75% line. Well, I'm not going to buy here and I'm not going to buy here. I'm going to start buying right here. And so this 2.75% line is a cumulative 2.75% if I would have bought here and if I would have bought here. And so once it comes down to here, I'm making more than 2.75%. Let's find another one. Let's just go to a different pair altogether. This is algo. So right here, look at this. So if I were to have purchased, let's say $20, when it goes up, that's, just under 9%. So what I'm going to do is I'm going to say, let's say I bought $10, right? Well, or what was it? Let's say I bought $50 times, 0.08. So, I'm only going to make $4 off of that trade. Do I care about that? That's not the trade that I'm looking for. Let's find a trade that just really. Here's something else that I've noticed. So look, it's going to come down and it cancels out this base. So why is this important? Because, see, I'm not going to take this trade. I'm not going to take that because what I want it to do is, I want it to drop. And so this might not be the base. Like this might be the base right here. And you can see, look, it goes bam, 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 and comes down like that. But even then I might not have taken it. But I won't take trades that kick itself out early. Like this, like it just kicks itself out early. I leave it alone. And so that's why I'm making a video about this, because I want to genuinely demonstrate, hey, I'm not buying the rest of this, because like this was the panic drop and then it bounced. You see what I'm saying? Like it came up 8%. Like it came up almost 9%. It came down, it comes back up. And so I'm saying, okay, you know what? This could be considered the base. Let's browse through the charts really quick, and I'll show you what I mean. Like here's and you can see I already have this set up in the way that I like it. Should it be down here as the base? Well, let's see if I can get it the base to be right there. So there it is, right there. So yeah, at this point, then I'll buy it, 5, 10, 15. I'll buy it right here. And then I'll see that there's other lines right here that mathematically would have been right there. So it's kind of cool that, I can make that decision and say, oh, wow, that's where my buys would have been sitting anyways. Okay, well, I would buy it right here. And it's crazy because it'll go down there and it'll get really scary. Like the price just went down there and it's dropped really far. It could continue to drop, and hopefully it does. I want it to drop, but I'm buying a small amount at that 15% mark. Like a small amount of my portfolio is being utilized right there. But, when it, like for instance, this isn't a base. Like this just isn't a base. It could be a base, but it's very, very visually clear. Like, okay, yeah, 14%. That's 14%. But let's look at this. 60%, I think that might be the base. So maybe in this case, I would, so there you go, right? I wouldn't have been able to participate in any of this for this particular pair. I would have left it alone because I don't like the fact that it comes down here and comes back up like that. And, somebody else might look at this and say, are you crazy? Like, why didn't you take that trade? And it's like, because like this was the bounce. That wasn't the bounce. Like this was just a retracement. That's not the like this is the impulse move, but like this was the impulse move. So it was like impulse move up. That's just not safe enough. You see what I'm saying? Let me skip to another one. That's the base right here. That is the base. Look. That came up like 30%. And then look, it came back down to it. And you see what I'm doing? Like, I mean, yeah, you know what? Honestly, that could be the base. We're in a very high time frame. We're in a 12-hour time frame. Let's bring it down a little bit. Like, I'm going to browse these charts with like 4-hour time frames. You see what I'm saying? So look right here. It came up 26%. And it came down. I didn't get any of this. Or maybe I actually... No, it was... Let's look at a trade that I got. I think it was this one. Yeah, right here. Yeah, I saw that. So in this case, it's like, okay, 42%. There's the base, right? Let me. What time frame did I do that on? So 1%. I guess it was this one. Let me see. Why did I feel comfortable taking that one? So I think I saw this and I said, okay, wow, it went down, right? Like it went down this far, and then it came back up 10%, right? And so to me, I'm like, okay, you know what? I did buy right here. I think it was just that it was like, because in this case, like I just made this entire video and I'm like telling you how not to take trades like this. And so like I genuinely took that trade. Like I bought this first layer and I sold up here. Um, I think when I looked at it, like I measured this and I was like, you know what? Boom, 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 boom. And I think what it was that like, I think there was like an element of like, it just kept creating these bases, and then it would fix them, and then it would go down, and then would fix them. This is a wick; it's not really a base, but like it would just continually do that again and again. And I'm like, okay, well, it's fixing its bases, but it's not really like bouncing back up on a base. And I think that's why I was looking at this, and I'm like, I was looking at it like this. I was like, okay, this is the base. Yeah, it came down 5% and it came back up. I'm like, that looks like this is a panic, because the way that I'm really looking at charts is more like this. I started doing this more. I don't know if I'm on logarithmic. Yeah, I'm on logarithmic. But like this really helps, and I'm like, red bar, red bar, red bar, and I'm like, all right, I think that's a panic. And I put a buy layer down there, and I was like, yeah, I feel comfortable taking this, because it was just like, boom, 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 cash out, and it's like boom, 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 and I'm like, oh, and this is a newer pair, and it came back up, and I was like, that was awesome. Let's go to another one really quick. These are like the DeFi things. They're getting, there's like, in my head, the way that I'm thinking about this is I'm like, there's a lot of money in DeFi right now. There's a lot of people like panicking out of these bad positions. Like, where is the money that needs my help putting liquidity on the books? Like, in my head, I'm thinking these older pairs, these older coins, there's like a lot of bot and algo activity. That's not really where the emotion is. And so that's why I feel a little bit more comfortable trading in that realm. I feel like people believe in the DeFi realm, and so you're supposed to trade stuff where like there's been like a chart with a history, but otherwise I wouldn't recommend it to people. I just like felt confident. I didn't put a lot of money on the books. Here's an example. Like, okay, this is only 10%. Why would I didn't take this trade, but like, why would I qualify that as a bounce? Well, let me look at it on the 1 hour really quick. Yeah, that's the base. You see what I'm saying? Like, you have to watch out. But here's the thing: is like, I do like these are relatively newer charts, and I'm like, okay, I can kind of tell. What's cool about with this indicator is I can tell like really quickly. Okay, boom, 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 boom. Okay, like I can get a feel for what the price action is going to look like, and so that would have been risky. Like, it just genuinely, that would have been a risky situation on that 1 hour. But I'm trying to like move the indicator to fit into something that I would be like, yeah, you know what, I'll consider that a base. Like, for instance, for the one that was 10%, like right here, thing about it is, it's like, okay, look, that's not necessarily a base. But the fact that it's just like red bar, red bar, red bar, red bar, it's like do 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 do, and it like, think about it, it's plowing through all of this. It's just like it just knocks out all of these layers, and I'm like, all right, it's rare. Like it's rare to find that, and so that's kind of what I'm doing is I'm shopping around. I'm like, how many how many how many times did it reach this amount? Like this is just, and again, I'm usually browsing with like the 4 hour, and you won't find like that many opportunities. Like that's the thing, unless you have like a lot of pairs. Um, they're going to cash themselves out, so to speak. Like that's how I'm thinking of this, is like they're cashing it themselves out. This one I actually did participate in. I'm upset I didn't put more into it right here. This isn't necessarily a bounce. That, I mean, it's 21%. That's the thing. And if you do this, it changes everything. Like you see how I'm bringing it down like that, and I'm like, all right, 21 or 20 or whatever. I mean, just like within that range, maybe like 18. I'm like, I'll call that a base, because here's what it's doing: red, red. It's like it can't go up. Like there's too many sellers. It's like I can't break that price barrier, and then it's just like, all right, uncle, and then it starts to pop up right here, and I'm like, that could it be going down any further? Like that's exactly what I'm thinking. It's like it just went down like to this 25%. Think about it. That's 25% of its value depleted. Please tell me that's going to bounce. And yeah, it did. Like straight up bounced. And then it did it again down here. And here's that 25% line. This is something that you might like consider as like, well, it did come down, 5% and came back. Can I call this the new base? Yeah, you could. Could you? Yes. Will I? I just feel like there's more opportunities out there. But funny thing is it came down, and look, here was that final bar that's just like put the nail in the coffin. You see how I'm like stretching out the length of it? It turns it from a grind into a panic a little bit more. You can kind of zoom in, because as price starts coming down, it starts to shrink, and so it's important. You may have to take it off of auto and do this from time to time. But I mean, it came down here, it didn't touch it, kind of came back up, and then it just went down. I mean, I wanted to buy right here. I think I may have purchased some right here, they were like free coins. Like I'd made profit up here, and I'd sold up in here, and then it came down here, and I was like, oh yeah, those were supposed to be my free coins, and so I put the profits back in right about here. And it kept going down, and I was like, oh man, it's all the way down there. I'm like, I have a feeling it's going to bounce right here. But that just doesn't feel good. I don't like the fact that it came and broke the base and then came back up. I want it to be like this was the line in the sand, and I want it to just like drop and go down 25%, and I'm just buying it up. That's safe. It's so nice. Like it's so nice having these lines right here, and then it's so nice having that mentality in my head, knowing that I want to buy that V shape. It's so nice having that mentality to put these date and price ranges. To get a feel for what I'm looking for. Let me go back to 4 hour. So that's only 12%. I wouldn't consider that a base. It's about to consider it a base right here. But, in my head, that was the bounce. Like this 12%, you can see like I've been here. Like I've been watching all my pairs. Look, like 61%. I mean, if you really wanted to call something a base, you could call that the base. But I mean, that's 54%. That's the base. And look at this. Look. This is what I'm talking about. And even if I did this, like 15%, the fact is this: red bar, red bar, red bar, red bar, red bar, red bar, red bar. And then look, like here's another base as confluence, and look, 5, 10, 15. So I'm buying in. If you want to call this the base, then you've also got this as confluence, saying, hey, look, I would have bought right there had it come down and not given me a bounce. Anyways, so here I am buying at 25%. Hey, if it goes down even further, great. It's going to be that much safer. Was this the base? Like, was this the base? Was this the base? All that I care about is like not that long ago, people really wanted it. Like, yeah, it could keep going down and never come back. But like, look at what happened last time. It just kept going down. It got bounced back up. Like, that's just what happened. Like, it was down here. Is this going to work? It's down here. The base is right here. And it's got this going on. Whoop. Look at that. They just bounce it back up. Like, it'll happen right when you least suspect it. And then red bar, red bar, red bar. And then it bounces back up. red bar, bounces back up. It's saying that's a new base. Sure, we'll call that a base. And then, boom, people are panicking. Like, if you bought up there at a different strategy, you know, like I trade different strategies, and sometimes I do buy up there, and sometimes it does come down, and sometimes my alerts don't sell. Like I've had situations where my alerts didn't sell, trading a completely different strategy, and then look, like, you know, some people just bought it because it was going crazy like this. And they were like, it's gonna keep going up like that. Well, like that's why these panic sells happen. It's because like there's got to be a bunch of people just like, oh my gosh, look, it was just whippy, 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 and then it just turned and went down. Let's get rid of it. And like after about 25%, like it starts to get picked up. And even if it goes down to like 30%, like if it drops tons of red bars like that, like oh, and then I'm out of the game. Like, you know, this is like 11%. And cumulatively, like if I bought right here, and right here, you know, I only bought a little bit right here, and I bought like a decent amount right here, and I bought like a whole lot right there. Like, I did good. I did real good. So yeah, I mean, I'm pretty pleased with just the mentality of taking these. Let's like, you can see like I'm like actively looking at these pairs and, you know, assessing where it's going to put a base. But I'm not taking these bases just because it put it on the chart. I'm qualifying a base first, visually, manually, saying how much did it bounce before it cracked that base. Like I'm going to qualify a base before I use this thing. It's just to help put those little grid lines on there. But it's nice that sometimes, like for instance, look, this came up 40%, and then it started bouncing. It got a little bit weak right here, and then it just turned around and just was like red bar, red bar, red bar, red bar, red bar. And look, I would bought a little right here, and I would have bought like medium size right there, and then it comes back up. You know, like, and then there's all of this. Like, yeah, it keeps going down. Here's the base right here. I just want to be in and out. Like, there's going to be so many trades like this across the board. Like when price starts genuinely panicking, you know, I want to, like, for instance, here's Link. Look, 30%. And here's another thing that's cool is I can see how did price react. Like, yeah, that's only 6%. I programmed the algorithm, like the settings in this indicator, to be like this because sometimes what will happen is I'll put it to you this way. Those settings in that indicator will always get out of a sticky situation. And with this type of strategy and this indicator, I've had this indicator get into some sticky situations and not get out of them. And so I've like continuously tweaked the indicator, and so that's why it's set up in this very way. Because I kind of want to, like, I want to know how it's usually interacting with its bases. Like, oh, okay, look, it usually only goes down about 10%, then it comes back up. Comes down about 10%, and then it comes back up. It came down 5%, came back up, 5% came back up. You know, most of these bases are about an 8% drop and a 6% bounce, you know, before it kind of goes down to the next one, goes down to the next one. And so, like, in this case, you know, I may call this the base, like right here where this line is. And so it comes down, it comes back up. Let's measure this, right? Like, forget the wick. Let's not even worry about the wick. Let's just do this. Okay, that's 31%. You see what I'm saying? Like, the buyers come in, they bounce it up 31%. It does this for a while. It's kind of losing a little bit of steam, which is okay. You know, it's not the end of the world. It's 4 hours, so these are like, you know, for a while. And then right here, let's go back in time, and let's go like right here. Okay, so if you're looking at this chart right here, you're like, all right, well look, here is the base. Like, in fact, if you look at like this, like let's pick in between this, right? And then you see all this activity. This is probably the line in the sand that everybody's looking at. That's like, if it goes under 10, 10 is the number. If it goes under 10, I'm going to sell. Like, period, the end, all these other different strategies. And what happens? Red bar, red bar, red bar, red bar. And then look, it comes down, and then people are like, oh, you know, it's going to bounce right here. Like, that was the big panic drop, right? So all these other people that are probably, you know, base trading or buying the dip, they put in all their size right there. And then it goes down another one, and they're like, oh, no. I guess I'll buy a little bit more, right? This is what they're thinking. So it comes down, and then it gives you this weak little bounce, and they're like, it better go up from here, right? Let's see what happens. Is this going to work? I have the worst internet right now. I don't think it's going to work. Oh, it's really slow. And let's zoom in. So we kind of, spoiler alert, right? But I do genuinely want to like zoom in and look at the chart really quick. I can't believe this video is this long. I thought this would be like a 10-minute video, just breaking things down really quick. There's subtle nuances, and like here's the thing. I chain watched like all of the Luke videos like 5 times over recently, like on top of the multiple times I've watched it over the past like 2 years. So going back and then taking notes, making screenshots, like posting them in like QFL Discord, sharing them in like the Telegram groups and whatnot. Certain stuff is sticking in my head, and very small details that might only be mentioned one time in a video within like 5 seconds that you might be doing something else. This doesn't look like it's going to be working. You get the idea. The reason that this is set at 2.75, this take profit line right here, is because it's going to get me out of a sticky situation. I'm not going to buy right here, and I'm not going to buy right here, but it basically disqualifies a panic if it's going to start coming back up like that. Like a real panic is going to be this huge bounce, and then it turns around, and then it freaks everybody out, and then it goes down like 15, 20, 25% before it just starts to turn around. And yeah, it could continue to go lower, but at about 25%, it's going to turn around at least 10%. And that's what happened right here. Now, I could keep my money in here if I wanted. Like I could sell maybe 75% or 50% at that level right there. The important thing is that the way that I have this set up with like auto view and trading view alerts and all of this is I can automate this and have a busy life and have these alerts fire off and work for me, because I don't want to work for my money. I want my money to work for me. Like I want to be the CEO, not the employee, if that makes sense. And so that's why I'm putting all of this time into this video, because I've been actively trading the strategy, but I haven't been giving it as much attention or love, because other strategies I can set it and forget it, right? And so the amount of time investment, the amount of emotional investment that goes into this is like a lot more time intensive, and you have to have that lifestyle of being able to drop everything, look at your phone. A lot of times I'll be sitting with somebody else working on like a completely unrelated to trading project. It may be fun, it may be business related, and this isn't something my mom can do. This isn't something that a friend of mine could do. I just would bet money that they're going to lose money trying to trade this strategy. Whereas if they use this and they watch this video and they see like, oh, okay, if this is all set up in the way that like I have it set up, they're probably actually going to like keep that money in the end. And it's probably not going to like go past 25%, go down to like 35, 40, 45, and then finally like, blow back up. Because I can even go back to, let's say, that big March drop, if my internet will let me. But you get the idea. Like, this is exactly what's happening. Is like, is that a base? Is that a base? Like, it's putting that as a base, right? Is that a base? That's the big question. Like, well, this is what's important. Is that's a panic drop, and like you could call that a base. And like, yeah, the buyers are probably like, this isn't as big of a surprise anymore, right? That's a QFL rule. Is like, that's not, look, it's weakened. The buyers are no longer there. It's not going to be as big of a surprise. But that was a surprise. Like, that was actually kind of a big surprise. And people believe in Link. Like, it got down to 7. I thought it was honestly going to get down even further, because I called this the base. You know what I mean? Like, I had this as the base, and I had this as the base, and I had this as the big base. And I was like, oh, it's going to come down here. I'm going to buy, all my buy orders are right there. And I actually had buy orders up here that I canceled because I thought this was a grind. That wasn't a grind. It just wasn't on logarithmic, and I didn't do this. And so this is a mistake that I made of not taking it off of auto and pulling it down like that and seeing, wow. It may not look like a big deal on that chart, but if you have money invested into this thing way up here, right? Like, let's genuinely say you bought up here. Let's say you bought this dip right here. You were smart. You bought the dip, and it came up, and you were like, nah, I want it to keep going further. And then it came down to here, and then it came past here. Maybe you bought a little right here, and maybe you bought some right here, but you're still anticipating it coming like way up here. Well, that's 46%. Like, as it starts going down further and further, you're like, all right, my value of what I have invested is like, I've lost about 30% of my money. And then it starts coming down like this, and it starts coming down like that, down to here. You're like, you just lost 38% of your investment, and you're like, oh my gosh. And then once it comes down to here, I mean, it's like 42%, like, okay, I'll sell. You don't have any more money. Even if you're buying the dip and you messed up or like something happened and then all this stuff is happening down here, you're expecting some bounce and just keeps going down further, like you're gonna say uncle. So, you know, that's why I would accept that, even though that's technically not considered a base. But that's how I'm able to see and use this indicator in this exact same way. Like, that's not a base. This would be considered the base. Let's put these little things on here really quick. Look, 19%, that's the base right here. And so when it comes down to here, boom, 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 well, I'm going to break some of the rules. You see what I'm saying? Like, I'm like, I'll break some of the rules. Like, it came down, it thought that was a base, well, and then it's continuing, it came down and kind of did this little grindy thing, and then dropped down here. It may come back up here. And if I'm only first starting to layer right here, or excuse me, right here, and it came up here and came down here, like, I might be curious to see if it'll, So yeah, I might buy right there, but I probably won't. I'll probably consider this the base. You know what I'm saying? Why waste money on a bad trade when, like, there's tons of perfectly good setups? That's funnier seeing, like, my other trades. This one was actually premature. I thought it was supposed to be like a 3-candle close above a certain line, and it was 2 candles. I'm not happy. No, I'm actually kidding. I'm actually very happy. I'm very happy that the market is, that there's buyers in the market is the best way. Like, I am allocating, portions of my portfolio for different strategies. And so, like, I'm running 3 strategies right now, and this base breaking strategy is like a third of it. And if the base breaking strategy needs more funds allocated to it, I can pull out funds from all of the other, like, if it's just like, that is a panic dive, then I can allocate funds from my other strategies, into this strategy. Like, I'm experimenting. I'm doing stuff. Like, I'm making the most of being a trader, in the sense that I'm interested in trading things back and forth and, like, satisfying that human emotion within others. And so if I see an opportunity come up, I'm willing to trade something because I believe that there's a greater opportunity somewhere else. And, maybe I might pull money out of this one situation that was a better situation in the end. But what I do know is that, I'm able to have that flexibility to do that. So I'm kind of, like, being a little bit rogue about it. Like, I'm not buying big on this strategy, but it's only because when that opportunity comes, because it will come, like, it comes with this particular market, I call them thunder candles, because they'll just devastate everybody. Like, it's like a humongous shakeout, and it just happens. Like, it's gonna happen. Like, this is one of them right here. Like, just, if you were going short, this is that devastating shakeout that just, like, man, if you went short and you left that in there, like, that's what that was. Devastation, especially if you're doing the strategy in the opposite direction and you missed that opportunity to sell down here. Like, this is just devastation for anybody going short. I feel like I'm getting off topic. This might not be a fantastic coin to, it's like, the percentages aren't as volatile. Let's look at this one really quick. I'm tempted to go through more just because, like, it's really important. Like, a lot of the situations that come up will apply different ideas from different videos that I've watched. And if you're not logging that information into your experience, then it's going to be really easy to make that error and have that one error. Like, with this particular strategy, one error can take, like, months of work and throw it away, because you're probably going to feel like, and like, you have to understand the way that this system works. it's built to make you feel like you're not making enough money at no matter what the strategy is. That this strategy, I mean, like this, like any strategy is going to have you feeling like you're not making enough money, and so you're going to modify things about it. And what this really is doing is it's preventing you uh, from buying big early. Like in this case, look, it cashed you out right here, right? You see how this works? Like it cashed you out right here, it cashed you out right here. Disregard this. This is a glitch. Like this is where it would have sold right here. This is what you're wanting. This is actually what I'm anticipating with future trades. What this thing is it's going to cross one of these layers, and then the auto view is going to automatically, I'm still figuring things out if I want it to have a new base created, and then just the layers are down there sitting there. I don't know if I feel 100% comfortable leaving capital out on the books yet, if that makes sense. Just for right now. Like, I want to look at this, I want to assess it, I want to see how fast the market is dropping. But this particular exchange, Kraken, gets a lot of these wicks. Anyways, I just want to show you that because actually, I have the worst internet. Basically what happened is this came down and it thought the base was somewhere else, and you wouldn't have been able to exit. And so this thing is stuck. I think I do need to go back and show you guys that. The point being that, you got to watch out. This is going to not be something that you can program 100% and walk away from it like other bots or strategies or anything like that. Like, there takes a little bit of human intervention. And let me bring it down to the 1 hour. It basically gets stuck. And you'll see this is what it'll look like when it gets stuck. Is it'll give you these little gray arrows and then a base, and then the lines are way up here. And what's funny? It was so close. Like, here's the thing. These exchanges, nothing is going to be mathematically perfect. And I could go into this indicator and I could say, oh, well, make the line, two instead of 2.75, we'll make it like 2.65. Like, this is what people will do. They'll come in and they'll say, well, that didn't work. Let's just bring it down to 2.5. Basically, let's get this little purple line to just scoot down until it touches the price, and then that's going to be our new thing from now on. Maybe it did already scoot down. Let me try this. But then I'm going to be missing opportunities otherwise, meaning like things are going to cancel out earlier for strategies where it would have worked. And so just in this case, like, I would much rather have it be 2.75. It just for lack of being able to, there's a new indicator out that it's just not the same. Like, it is the same, but the coding inside of it, I haven't spent enough time to be able to get it to do exactly what I want it to do 100%. And so that's why I'm going with the, I think it's like the 2.3 version. It's like, he released two more. There's a 2.5 and 2.4 that the guy Vinny has released. It's a great indicator. I mean, genuinely, like, I would prefer to have this over the base breaking scanner tools that are available right now. And the only reason, okay, so like, here's another example. Like, I'm just not going to call that a base. Like, if I'm going to call anything a base, I'm going to scoot this down right here. But like, in my head, like, that's not the base. You see what I'm saying? Like, then what I'm going to do is I'm going to zoom out my time frame. Man, this internet is bad. It's like DSL out in the woods. And it's like going through another Wi-Fi. Like, it's like bootlegged from like another DSL router, sent like through Wi-Fi to like an Ethernet cable to the building that I'm in, and then like it's going through like 3 Wi-Fis. I'm having a great time, by the way. Like I'm excited because like the settings that I have available on this, I'm able to like go back in time and see how it's going to interact with the indicator. Like I want to see how it's going to interact with this indicator, dropping down at this price, coming up at this price. Like, if I could just manually draw a line and say, okay, well, where's 15, 20, and 25%, 30%, 35, and then put the buy layers up right there. You could do that on your own without this indicator. I just like seeing where the indicator considers something a base. Like, I'm curious to see how the robot is going to, place a base on the chart. But all I have to do is just measure it for myself. Like, okay, for instance, this is that same chart. They called that the base. Now, that's a wick. But when I look at this, I'm like, that's the base. And like, look. You see, like, this bounce right here came up, came back down, hit this right here, came down. Like, I know that is the base. And here's the best part about it. Look. If it comes down like this, boom, 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 help me. Like I know it's going to come up at least, like from here, it's going to come up at least that much if it crosses a very significant base. If it comes down 25%, like that seems to be about the number. Here's this one that's 27% base, but I can't go to it because it's canceled the base out. We're already at an hour. I just want you to feel comfortable seeing how I'm using these settings because I'm not relying on the bases at all. I'm relying on my eyes to spot that V shape. It's a V, and then a line gets put under that. I'm like, that is a V. And then, using the price, date and price tool, I'm like, that's 27%. I'm going to draw a line right under there. And like, if it goes under there, at about 15, 20, 25%, yeah, I'm going to buy some. Here's another one. Okay, look, is this a base? I mean, oh, well, you can say that it worked, but like, I mean, yeah, it came up 15% if you were to measure like right here. But, that was the base right there. Like, and look, it came up even more up here. But like, this is something important. Right here at 32%, right? Well, it came back down, and like, I'm more concerned, not the fact that it came up 32% at one point. How much did they recently bounce it? Like, how much did they really recently bounce it? Like, right about here. It's right about there. It's about 22%. That's what I care about. And then you see how it comes down right here, and then it kind of like, it does this, and then kind of dances around here. I'm going to use this as the base, but maybe I can switch the indicator up to get this as the base right here. Like, whoops. Because I want to use the indicator. I want to automate it. So you can see what I'm doing. I'm going down to the 3-hour time frame. My internet is so poor right now. Like, usually it's not this bad. It's like 1:46 in the morning over here. I don't know why it's this bad. Anyways, you've already seen how I do this. I change the time frame until it considers that bounce right there the base. And then with auto view, I'm using the layer lines to automatically, using code with TradingView alerts. Excuse me. It's gonna pick these green lines right here. 15, 20, 25%. It's going to pick those lines, that data, tick, 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 and it's going to throw it onto my exchange with the amount that I want it to be. I'm sure I've said like the same thing like 30 times now. Oh, here we go. It's funny now when I look at price action, I'm like, wow, look at this run up. Oh, that's a great, like, I get excited when I see this run up, not because like I want to buy it right there, but because I'm like, wow, a great base was established right there. Like, I'm like, yes. Like, if I see price just go berserk, I get really excited, but not to buy it right there anymore. Like now I'm like, oh, I want it to trigger my little X's. I want it to like cross and knock these little things out. This will probably work a little bit better. That's what I'm talking about. Look at that. This is why the video had to be this long. Let me delete that. Okay, look at that. So here we are, right? And let's do this because like I want you to see what I'm seeing. Because sometimes it doesn't look like a panic drop. So look, this is the base right here. Like look at this. It's like boom, boom, and then it almost came up, but you know it didn't. And because it didn't go up there, it's like, all right, send it back down. Boom, boom. Like, yeah, I'm gonna buy. Oh, and it just barely missed it. That's because somebody had all their buy orders right there. Oh, they had this measured out. They're like, that's 25%. I'm gonna buy 24.999. You know, and you could do that. Like, you could adjust these layers to be like, 24%, 14%, 13% instead of 15%. Like, anywhere you buy under here, it's going to be up to you. Like, a bunch of people can watch this video and be like, well, if I'm using this base right here, and then he's using this base, and she's using this base, well, then, we're all just going to be buying at the same place. And it's like, no, you can adjust these layers yourself. You can tweak this indicator. Like, you're not the only one that is trying to do this exact same idea or exact same strategy, and like there's different exchanges, and like by me showing this video it doesn't change anything. Like I can publish this video and then turn around and move my layers at different places. Like instead of 15, it could be like 16.25, and then like right here this could be like 19.7, and then this could be like 26.25, and then I could have layers go down further. It's just the way that this is set up right now. I just really like it, and I'm sure I could tweak on the indicator and get it a little bit better, and I probably will. It's just that, like, I have been trying to tweak the newest one, and they've got, like, the multiplier for your layers and so on and so forth, and there's something special about this. I'm just telling you right now with, like, the 2.75 and the ability that I'm able to have the numbers increase. Like, here would be, like, an excellent future tweak on the indicator that the Vinny guy has created for this is each individual layer you can specify how much they're buying. Because there's some Quick Fingers Luke videos where he said, this is what he said, he's like, he takes the paintbrush and he's like, okay, this is a 10-hour chart, but let's just draw the base right here, okay? He's like, all right, there's the base, and he's like, this is how he was explaining how he would be buying right here. He's like, I'll buy like, oh, crap. He's like, I'll buy like 100 right here, 100 right here. I think it was like 300, 300, 300, 300. But let's just say it was 100, 100, 100, 100. And he's like, right, that's how he's layering it. He's like, then I'll get, 500 right here, and then I'll get like 3,000 right here. Or some like, I mean, go back and watch the videos. Don't take my word for it. Go back and watch the videos. But that's in my head is like, he gets one layer right here, one layer right here, one layer right here. And then he starts to increase sides, and then he starts to really increase sides. And so that's kind of how that's why I set it up in the same way. And so I was saying, okay, well, you know what? What would be like the safest way of going about doing that? And so like, let's just round this out, like full circle, no pun intended for the safe circle. Real bad joke. Real bad inside joke. You're probably like, I don't even get it. I love this stuff. Is look, like 5, 10, 15, right? Look, that's like 100, 100, 100, 100, 200, 400. You know what I'm saying? Like that's how my mentality was working out when I created this. But if I'm not buying this and I'm not buying this and I'm only buying this, well then, this 2.75% take profit is actually, I'm at a loss selling down here on this first buy. I'm at a loss right here selling at the second buy. And so by the time that it triggers like these two, my break-even line is, my break-even if I only buy this layer and this layer, I'm going to be making a lot more money by not buying these layers. See what I'm saying? And there's so many potential trades where price action is panicking, doing this, that these aren't worth the time to take. Isn't that cool? Like the 5 and the 10%, you don't have to take those. It's the 15, the 20, the 25. Like, I can just quickly, like, I wish that my internet was better because then we could kind of go through the charts a little bit quicker. But that's what I'm doing normally. Like if I'm here and I'm looking at charts, I'm looking for those particular setups. I've measured the bounce. I'm like, 14%. I mean, this is really more of the base. How much is this? Like, but I really care about like, yeah, that was the base, and then it came down and it kind of scooched the base down to technically like, right here. Here's the new base, and then that's only like 14%. But isn't that funny? I'm looking at 14%, and I'm like, or 15, just under 15%. And I'm like, that's not really a bounce. But that's because, price usually bounces. Which pair is this? OXT. Price usually bounces, 20, 28, 25, whatever. I mean, look at this. It's like, now let's say the situation like this. What would I do? Like, okay, well, yeah, it closed out the trade right here. Oh, and it came down. Look, and it would have come down, and I could have bought it right here, and it would have bounced up. Sure, take it. Nobody's telling you not to take it at all. Like, do I want to take this personally? Like, looking at this? Well, let's say I'm browsing through other charts, and this was September 3rd. This was a big day for prices to drop, and so if I go through, how many pairs do I have? Like, at least like 25, 30 pairs. There's going to be a better setup. There's going to be a better setup. And this proves to me like, I mean, yeah, red bar, but like OXT, I don't trust that coin. Link probably was a better panic drop than that. You see what I'm saying? That's why I like it not being perfect, just the way that I have the indicator set up, because I want to see it disqualify itself with the indicator. Like for instance, right here. And this is some messy price action. Their books are kind of like this, for instance. Look, this was the same thing. Look, panic drop. Like we didn't know what was happening. We were just like, oh my gosh, like price is dropping. Yeah, it's probably gonna bounce up, but like we don't know if it's gonna. Let's do a little thing right here. Price came up about 14%. Like this might be able to be considered the base, and so like in this case, yeah, look, it kind of came down right here, and this, like, look at this. This is 4-hour increments, and if I see this, I'm like, okay, well, I've got plenty of time. September 2nd, like all of September 2nd, when I wake up and I see this, and I'm like, okay, you know what? This is the real base right here. This guy right here. Look at how much time that I have. A whole day. I mean, I've been recording this video for like 1 hour, and I've had like multiple hours to, get the base correct. So I could just be like browsing through the charts, and look, there it is. There, right there, came down right here, and it drew the base, and then look, ka-ching.